Here's something that might shock traditional investors. Gold just delivered its most explosive monthly performance this year, and the forces driving it could reshape the entire precious metals landscape. August witnessed an extraordinary 4.78% surge in gold prices, leaving many market participants scrambling to understand what's really happening beneath the surface. But here's where it gets controversial. This rally might just be getting started, and the reasons behind it are more complex than most people realize. The dollar's dramatic weakness fuels the fire. While gold was climbing to new heights, the US dollar index experienced a substantial decline of 2.19% throughout August, ultimately settling at 97.855 by Friday's close. This isn't just a minor fluctuation. It represents a significant shift in currency dynamics that savvy investors are watching closely. What makes this particularly interesting is the technical picture emerging around the dollar. The 50-day moving average, positioned around the 98.000 mark, now stands as a critical resistance barrier that could determine the dollar's next direction. With current trading levels sitting beneath this threshold, the bearish sentiment surrounding the greenback appears well established, creating an increasingly favorable environment for gold to flourish. Federal Reserve policy expectations create perfect storm. The precious metal continues to ride the wave of mounting anticipation surrounding potential Federal Reserve policy adjustments. This is where traditional investment wisdom comes into play. When interest rates decline, non-yielding assets like gold typically become more attractive relative to yield-bearing alternatives. Investors aren't just talking about this shift. They're putting their money where their mouths are. Recent data reveals that gold exchange-traded funds attracted nearly 15 tons of fresh capital over just the past 2 trading sessions. That level of institutional interest suggests this isn't merely retail speculation. Sophisticated money is taking notice. And this is the part most people miss. The technical breakthrough above the $3,400 level represents more than just a number on a chart. It signals a fundamental shift in market structure that could have lasting implications for gold's trajectory. Political drama adds unexpected fuel to gold's rally. Here's where things get truly controversial. Recent legal maneuvers by President Trump targeting Fed Governor Lisa Cook have injected an entirely new dimension of uncertainty into the precious metals equation. While no official decisions have emerged from these efforts, the mere possibility of changes to Federal Reserve leadership composition is sending ripples through financial markets. This political pressure creates a fascinating paradox. Attempts to influence central bank independence might actually be strengthening the case for gold as a hedge against institutional uncertainty. Some analysts argue this development, regardless of its ultimate outcome, demonstrates the kind of policy unpredictability that historically drives investors towards safe haven assets. Technical analysis points to explosive potential. The technical landscape for gold presents a compelling bullish narrative as September approaches. The decisive penetration above previous resistance levels has established what many chartists consider a textbook bullish formation. Friday's session peak at $3,453.97 now serves as the immediate hurdle that bulls need to overcome to maintain momentum. Should buyers manage to push prices beyond this threshold, the pathway opens toward testing the psychological barrier at $3,500.20, a level that represents the all-time high. On the downside, the 50-day moving average at $3,349.60 provides crucial support and remains the key level that traders are monitoring to gauge whether the current uptrend maintains its integrity. This level has proven pivotal in recent price action and will likely continue to influence market sentiment. The bigger picture, what this really means for investors. But here's the question that's dividing analysts. Is this surge sustainable? Or are we witnessing an overextended rally that's due for a correction? The convergence of multiple supportive factors, from dollar weakness to Fed policy expectations and political uncertainty, suggests this isn't your typical short-term price spike. The combination of technical breakthrough and fundamental drivers creates what many consider a rare alignment of bullish forces. Yet skeptics argue that gold's rapid ascent has pushed valuations into territory where profit-taking could emerge. They point to the speed of the recent advance as a potential warning sign that momentum might be getting ahead of itself. What do you think? Is gold's explosive rally just beginning, or are we approaching a dangerous peak? The evidence points in multiple directions, and the debate among professional traders has never been more intense. Share your perspective. Are you betting on continued strength, or do you see warning signs that others are missing?